Coach owner Tapestry out with quarterly results this morning, missing estimates of both the top and bottom line. The retailer's revenue in North America declining, but gross profit margin did come in above the street's expectations. Fiscal year guidance for Tapestry trailing what the street was looking for. Now, these results coming as the retailers navigate shifting consumer spending amid much economic uncertainty. So what's in store for the luxury retail here after we are coming off a record year? We want to break all of this down as part of Yahoo Finance's week-long special Retail Evolution, the New Era. Joining us now to discuss, we want to bring in Pauline Brown, former LVMH chairman of North America. Pauline, it's great to have you here in studio. So let's start with what we just heard from Tapestry this morning, because they did see a decline in sales for North America. Are we starting to see the U.S. consumer, the luxury consumer, weaken even more than we had expected?
Well, I actually think we're starting to see it get better. I think 2022 and the early part of 23 were challenging across the board. There were only one or two luxury players that weren't hit in North America. But when I look in recent weeks and when I look at the forecast for the rest of the year, I think we have turned a corner. Not to say every player, including Tapestry, are going to ride that wave, but I think some of the bigger ones. Well, I think it's very brand specific. So when I look at high performing brands, Chanel, Hermes, Cartier, I think they're doing quite well again. The confidence in the market is back. The stock market is doing certainly better than it was a year ago this time. But when I look at the second tier brands, which sadly for Tapestry, I think they fall in that camp.
So let me ask you, with the deal they've made with Capri, and gaining, say, Kors and Jimmy Choo, does it give Tapestry enough scale? Because clearly they're trying to compete with, say, the scale of an LVMH. Does it give it enough scale?
No, does not, unfortunately. It gives it more scale. It almost doubles the business, but it's still, as a percentage of personal luxury spend, probably about 3% to LVMH's 16, 18%, depending on how you measure. And the quality of the brands, of those 6 brands and the new Tapestry combined portfolio, are not that great.
So who do they need to buy then to kind of beef it up and compete?
Oh, I mean, if I were CEO and if I had my druthers, I'd try to merge now with Ralph Lauren. I think that would be a match made in heaven.
When it comes to so much consolidation within the sector, you talk about the fact that the leaders here, LVMH obviously being one of the leaders, if not the leader in this space, is that going to force even more consolidation down the line? And what does that look like outside of names like Tapestry and potentially Ralph Lauren?
Yeah, it is forcing activity, and in some cases unhealthily. So if you look at Kering, which is the number 2 player, by far number 2. So there's a huge gap and a growing gap between LVMH and Kering. They have been very acquisitive of late. They have made a big push into beauty, first time ever. They acquired Creed, which is a fragrance brand. They are rumored to be in talks with CAA, which would be interesting if that happened. And they just took a 30% stake in Valentino. And they did all 3 in a relatively short period of time. So already we see it even among the second and third tier brands, a lot of activity. But unfortunately for all of them, they just can't catch up with LVMH in breadth or depth.
And so who are the losers in this kind of environment where you say, because you said you see, trends of, I guess, luxury holding up and in fact picking up. Who is, who's the laggard here?
Well, if you look past just fashion in luxury or jewelry and watches, I think the losers are those that are not doubling down on the real premium side of the market. It's Estee Lauder. Estee Lauder has lost its differentiation with some of its mass competitors. I was at Estee Lauder earlier in my career. When I was there was such a clear divide between what we called mass and class. And we didn't see L'Oreal, for example, as our arch competitor. We saw their Lancôme division as a competitor. Nowadays, I think the big mass brands have really closed the gap.
How do you see, or I guess, who's best positioned to navigate the slowdown over in China? We know that this is such a critical market when it comes to luxury retail. Certainly, the slowdown seems like news out of China getting worse and worse by the day. What's the ripple effect?
Well, I think there are 2 things that will stave off a disaster for those luxury brands that have depended on Chinese growth. One are going to be those that are, I would say, not over-distributed. So Hermes has been very disciplined for much of its history. They have a lot of appeal among Chinese, but they certainly have more demand than supply. I think for a brand like Vuitton, they're exposed. I think most of the brands are heavily exposed, and I go back to Estee Lauder, overexposed. The other one I would say is the brands who have tried too hard to appeal to multiple generations are struggling more than those who have taken a narrow focus of the market and really done it well. I go back to Hermes as a best in class.
And one question I want to ask you about that has been impacting, particularly when you think about retail across the board, is organized crime and this theft issue. For the luxury retailers or the luxury brands, how much of a problem is that when you think about how often where the crime happens is at the retailer, like a Nordstrom? We see viral video after viral video of this. Where is, I don't know if it's the responsibility, and what does that do to the brand itself? Does it dilute the brand at all? I mean, I can't see it doing that, but you know.
Above all, what it dilutes is the appetite of consumers to walk into the store. The city that has been hardest hit by proliferation of crime is San Francisco. And you look at all the closings, especially in the premium, but also more mass market like Gap has pulled out. It's their home market, and they are pulling out. And some of that is because you lose a lot of the economics when you have these rampant crimes, and some of it is because you don't get the traffic anymore. But I don't think of that as a nationwide crisis. I think it's very city specific.
Okay.
All right. You don't think that's interesting, because we were talking to a guest yesterday who was saying that it's very widespread, and he's expecting it to get much worse even than it is right now.
It might depend on the category. One of the issues California is so susceptible is the laws that are not necessarily in favor of retailers. And many of them have a policy, someone comes in, there's not much you can do.
Right. Certainly. All right. Well, Pauline Brown, always great to get
Thank
your
you.
perspective on luxury retail. Thanks so much for hopping in studio.
Thank you. Good to see you.